Join us now to talk about the economic data that we just got and what's next for the economy. William Spriggs, chief economist of the AFL-CIO and economics professor at Howard University. Professor, when you were listening to that, did that seem shocking at all to you? What you heard from Rick when you heard that PPI number?
No, at some point we were going to have services adjust their price level because they've been running with very low demand, and at some point they were going to respond to having greater demand. This isn't an out of the ordinary number. It's nowhere near the Fed's 2% target, and I'm not sure that it's going to be sustained. At some point there had to be this adjustment.
And then you heard some subsequent stuff from Steve, and I just thought, were Jay Powell's comments, do those still hold true, or in terms of inflationary expectations and moves by the Fed? If we had a series of numbers like this, would you think that maybe they would reevaluate and may have missed this nascent price action?
People who have ghost of 1970 and want to see inflation always think that any blip is the next 12% inflation spike. Again, there's going to have to be some adjustment to price levels and services. Airlines have been totally empty. They have been pricing accordingly. Restaurants, all sorts of services, gyms, all sorts of personal services have not been able to meet their demand. And finally, in December and January, as incomes have started to come back, people are going to start to go back to some of these services. And so we should expect to see periods where the price is going to spike. I do not think that the Fed is going to interpret this as the next wave of inflation. And let's hope that it does not. Let's remember that right now in the labor market, we're down as deep as we were at the depth of the Great Recession. So we have a huge amount of jobs to get back before we're anywhere near full capacity. And most of the service sector is nowhere near full capacity.
Yeah, 10 million jobs at least. And I remember the 70s, and I've finally given up. I remember Volcker. I've given up worrying about it again, and I accept we're in a new paradigm for inflation. You need the wage price spiral. But when you look at the amount of central bank action in this country and really around the world for years and years and years now, are we seeing any deleterious effects there? Do you acknowledge that asset inflation at this point might be getting to a level where it's troublesome?
From my perspective, asset inflation, particularly the stock market, is just an indication that private capital doesn't seem to have a place to go. It's the reason why many people are calling on governments to use the fiscal space, because there's no risk that governments making the proper investments at this time would be inflationary, and it's necessary that we get public investment up to a level that fits the 21st century. I don't think we've properly modeled the level of investment it takes in the 21st century to create the broad sense of infrastructure. We've struggled in this nation right now with not having enough broadband for our students to stay at home. It's a struggle that shouldn't be in place. We should have a better investment from the public sector. And with the need to transform to a greener economy, we're going to have a much bigger public investment.
Shepard Smith here. Thanks for watching CNBC on YouTube.